everybody, welcome to my YouTube channel. I am the Chartist, and today we got this beautiful, nice double inside day candle trade setup, okay, on the S&P 500. If you don't know what it is, I'll explain real quick. All right, this right here is the grandmother candle, this is the mother candle, and this is the child candle. What that means is the mother candle is within the range of the grandmother candle. Okay, you see how it's smaller than this? And then the child candle is in the range of the mother candle. Okay, you guys get it? So basically it represents a consolidation. All right, so the question is, what is SPY consolidating for? Is it consolidating to go to the upside or consolidating to go to the right side? Okay, so first off, let's go over the scenarios. The bull scenario is this, because this is the way you trade inside day or double inside day candle setups. You wait for the break of the high or the low of the grandmother candle. Okay, so the grandmother candle's high is at 444.89 and the low is at 439.60. So the way you trade the inside day candle is, if SPY breaks 444.89, it closes above that, that's a big sign, a bullish sign that we're going to head to the upside. If SPY breaks the low of 439.60, that's a very bearish sign that we're going to head down lower. Okay, that's how you trade a double inside day candle setup. All right, so with that being said, what I want to see also, as far as the bull scenario go, is SPY trade above 446. Okay, because that's where our 20-day moving average is, which is also a very strong resistant area. Okay, as long as SPY is trading below this resistance zone right now, it's gonna look bearish. Okay, but it could just be more consolidating, which is what's happening right now with this double inside day candle setup. So if SPY closes below this, above this 20-day moving average, and it breaks the high of this grandmother candle, very bullish sign, and we could be heading up to 460 plus for the next price target. Okay, now if SPY breaks the low of the grandmother candle at 439.60, it also breaks this critical support level. It was a critical support level. This was touched here, and it's been there since May 19th. Okay, so it broke down before, and we was able to get back above, making it look like a false breakdown. Okay, but I think if we break below it again, I think we're gonna head to a deeper correction, and we have my next support level here, which is the previous high at 425. All right, at least if this level does not hold, and if so, basically 439.60 breaks that low. It also puts it below the 5-day moving average, bearish price action, and also breaks this critical support level right here. All right, so if that breaks, we could head all the way down to 425. That's the bearish scenario. Okay, so the way I'm gonna be trading this, I am gonna be trading this based on the double inside day candle setup. All right, so after watching my video, not now, please continue watching my video, thank you. But after watching my video, definitely look up more information about the double inside day candle or the inside day candle trade setup. Okay, if anything, you can rewind the video and you can hear me explain it again. All right, so that's what I got on SPY right now. Take a look at VIX, which inverses the SPY. It's trading below most of our moving average. Okay, the 5, 13, 200, and the 20. We're getting some resistance at the 20-day moving average for the VIX, but we're above the 50-day moving average. Okay, so we gotta watch that tomorrow to see if VIX can get below all the moving averages again. But overall, it's looking bearish. Okay, so a bearish VIX is good news and bullish for the SPY. All right, so going back to the SPY, remember the double inside day candle setup is basically consolidating sideways action and is building up, energy for a move either to the upside or to the downside. So watch for that break of either the high or low of the grandmother candle. Moving on to Triple Q. Triple Q's price action is looking bearish. Okay, we did get some buying pressure at this critical support level right here at 368. However, we're getting some resistance at the 50-day and the 5-day moving average, and overall it's bearish because it's below most of the moving average except for the 200-day, which is all the way down here at 339. That's a big drop. So watching 368 tomorrow. If Triple Q breaks below that and starts closing below that, it can come all the way down to 350. which is where I got the next support. Based on that right there, you see it? Here, 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 we had 3 touches. Will we get that 4th touch? If we do, it could touch the 350 to 353 level, okay? Just so, you know, just translating the charts, guys. It's looking pretty bearish right now, all right? Now, for this to look bullish again, of course, we want to see it close above the 50-day moving average, right? Which is above 370.65. All right, that'll show us that it's some bullish momentum building, some buying pressure building to push us up to the 13-day at 373.5 and possibly the 20-day, which is at 376. And of course, if QQQ is back above 376, we go and test this resistance level here at 379. As you can see, starting from there where it looked like it's bull flagging. All right, and then we'll watch for the breakout and see if we can get to the next price target, which would be somewhere around here, around 387. Okay, but as of right now, it's looking bearish. Let's continue to watch if QQQ can hold above 368.74. But if it closes below that right here, it's a big sign that we're going to head down lower to a deeper correction all the way down to the 350 to 353 range. All right, guys. Now, those are looking bearish, but Tesla is looking bullish. Okay, now I mentioned that Tesla was following Wickoff's accumulation for quite some time. All right, as you can see, I have it labeled there. Look up Wickoff's accumulation. And last Friday, we was at the second high of what's supposed to be in the phase B. This was supposed to be the highest in phase B, and we were supposed to get close to touching that level, but failing and heading down lower for more buying opportunities. However, today, Tesla broke above that level, and now it's looking like it's not even following Wickoff's accumulation no more. So with that being said, I'm going to have to go back to sticking to good old price action, right? So bring back the moving averages. You can see that Tesla right now is pretty overextended and trading way above the upper Bollinger Band, okay? It's pretty far from the 5-day and the 20-day, and of course the 50 and the 200, okay? So what I want to see, I recommend not catching FOMO, okay? What I want to see is a retracement back to one of our critical support levels, okay? Which is here, one is at 781. That's where the previous high was over here, to see if Tesla can continue to hold above that level, and that will be a good entry level. But if that doesn't hold, of course, this is where the breakout level is for this bull flag, which is around here, 754 to 753 level. And if that doesn't hold, we have this really critical support level that started since May 19. We have a touch there. Will we get the third touch? Would be all the way down here at 718 level. All right, and like always, I always want to bring up the AOL, the area of liquidity. Okay, let me move the moving averages. Okay, so this white zone right here would be the area of liquidity where the stop losses are building up for the retail traders. So there's a chance that the market movers could look to take us, fake us out in that zone, right? All the way down to 704 to 701 maybe. All right, so down that zone, watch out, because if they take us out and they start pushing it back up, then I'm really bullish on it, and we could go up to a new or back to a previous all-time high around back to this level, okay? But we'll see what happens. I don't recommend catching FOMO. Wait for a retracement back to one of our support levels. You know, that's the safest bet. If not, I mean, you know, you guys can YOLO it. That's on you. I don't recommend it. But, you know, be careful, because Tesla is a very volatile stock. You're either going to make a lot of money or you're going to lose a lot of money. All right? Moving on to Bitcoin. I got Bitcoin in this big cup and handle pattern. Okay, remember, cup and handle patterns are bullish patterns. All right, but right now we're on the handle part. Okay, this is the handle. We do have support based on the Fibonacci level around the 38.2. Yep, 38.2 level, which is at the 61.8 retracement. All right, because right now Bitcoin is trading below all of our moving average. It's looking pretty bearish. Look like it can head to more downside. Okay, so we're gonna watch for the 61.8 retracement. That's where I would look to enter to buy more. Okay, take that out. Of course, if the 38K retrace level does not hold, we have this triple bottom here, which means just below that at the 29 to the 27K range. That's the area of liquidity. So if market makers push it down that low, a lot of people are going to get scared. But me, I'm going to get greedy. All right? I'm going to start to buy more. And of course, if Bitcoin can change its direction and break out right here, around here, the 45K level, and starts heading back and closing above 45K, that would be very, very bullish, because not only is it getting back above the 20-day moving average, but it's going to be breaking out of the cup and handle pattern. All right? So that's what I got today, guys. Thank you guys for watching. If you didn't already, please hit the like and subscribe button. I hope my technical analysis was able to help, and I'll see y'all soon.